I want to discuss the two voting points that are coming up for Tesla's shareholder meeting, the two relevant ones. One is Elon Musk's pay package, which is controversial because a judge in Delaware decided that what was approved by the board and the shareholders has been nullified. So in other words, Musk is not being paid what he's promised by his own company and his own owners and the board. And the second is the move of Tesla from Delaware, the corporate headquarters, the official legal corporate headquarters from Delaware to Texas. So both of those are up for vote. We at Orange Capital Partners have voted for both resolutions a yes. In other words, we want Musk to be paid what he was promised, and we want Tesla to move to Texas. And the purpose of this episode is to discuss these things. And I think I want to just say a few things before I start. First, it's incredibly important to have this vote. I think this is a good thing. As annoying as it is, as difficult as it is for us, shareholders now to deal with this, it's actually a very, very important thing because it shows the weaknesses of current shareholder law in the US. It shows the potential misappropriation of bureaucrats that can totally overreach their powers and do votes, such as in this case, for example, the person that runs the CalPERS fund or the Norwegian sovereign fund, people like that who have absolutely no skin in the game, who have no personal wealth or even reputation at risk, simply voting for either political reasons or personal reasons or God knows what reasons, but not the kinds of reasons that matter, that matter for owners, which is what's the best for the long-term viability of this company, what's the best for the long-term return of shareholders who have invested their hard-earned money in this company. This is an Odd Even Wrong podcast. It's June 9, 2024. This is Krim Telco. It's a Sunday. There's no update. For the year, we are down 7.5%. The market is up 12%. We're outperforming by 19.5%. So I want to bring these 2 points up for discussion. The 2 points are going to be voted at the shareholder meeting, the 2 relevant points. One is the pay package for Elon Musk, and the other is the move to Texas from Delaware, the legal corporate headquarters. So let's start with the pay package. Why did we vote yes? There's several reasons. First, I think there's the common sense reason because, that's what was decided years ago. Elon was promised this kind of pay, and he delivered on all the metrics, and he should be paid. So that's just pure contract law or whatever you want to call it. You sign a deal and then you honor it. And we as owners of Tesla, we're happy to honor this deal because we also did extremely well under the leadership of Elon Musk. Now, I want to bring a couple more points, maybe more tangible points for people who have a problem with that from some ethical, social perspective, always being paid too much or whatever. And I think I want to use Ashok's email today. He wrote a piece on Twitter about the importance of Elon Musk for the AI team, which is his vantage point. And I want to extrapolate this and just bring 3 examples of why we believe that Elon Musk is crucial for Tesla. And the summarize, the sort of overarching general reason, it's not because he's smart, it's not because he's got connections, it's not because he whatever, it's just simply because he has an uncanny ability to take big risks and deliver on them. And number one, just 3 examples to illustrate this. Number one, he decided to build a gigafactory in the desert of Nevada at a point when I think we were talking about 20,000 Model S's to be produced. So it was a time when electric vehicles were at best niche products. Actually, they weren't even niche products. They were toy products for actors in Los Angeles and some, pseudo-green rich people in Silicon Valley. At that time, to put a $5 billion investment into the desert of Nevada to convince Panasonic to help them build battery cells was a massive, massive risk, and it paid off, because without that, we would not have the kind of volume growth that Model 3 and Model Y brought to us. We wouldn't have had the kind of wealth creation that happened. And most importantly, we wouldn't have had this switch in the social consciousness of the United States and the rest of the world that electric vehicles are not just some niche product, but serious contenders for the future of transportation. Second example, that's what Ashok was talking about. It was his approach to AI. And there's several subdivisions that I just want to mention here. Number one, he decided very early on to go from mobilize vision technology towards his own or Tesla's own vision stack. Now, for people who are not super familiar with AI and vision and things like that, let me just give a very brief overview of why this is important. I think in general, we can say that the journey of Tesla's AI strategy from rudimentary lane keeping towards FSD-12, which is the best robot in the world right now in any kind of domain, whether it's driving or factory or whatever, this is the closest we have to embodied intelligence, in the sense that a machine is able to act in a human-like way and solve real problems such as driving in condensed cities. The overarching theme here is data-driven learning. Let me explain. So you have, let's say, in the 2006 timeframe, the DARPA challenge, which is the first attempt to build autonomous driving vehicles in a more maybe industrial way. Of course, there has always been attempts before the moon landing, a Mars exploration, things like that. We've always had attempts for autonomous driving. Now, the word autonomous, of course, means a lot of things to a lot of people. And this is also where the rubber meets the road for Tesla. So Tesla starts with state-of-the-art autonomous driving technology, for example, using Mobileye as a vision technology provider, and using other suppliers, Bosch and people like that, to help them with planning and actuators and all those kinds of things. There is a decision made at some point, and that's when Ashok was hired, to start data-driven learning. And what that means is that you go from software 1.0 to software 2.0. And mentioning software 2.0, which is a phrase that was coined by Andrej Karpathy not too long after Ashok was hired, Andrej was hired, and that was the big move towards data-driven learning for vision, solving vision through data and algorithms, and not through explicit programming and heuristics. Later on, we have the switch from some sort of planned execution of tasks towards end-to-end learning in FSD. And here we go. We're in June of 2024. I'm driving around with my FSD, and it's mind-blowing. It's my third month now, and I'm used to it now. I'm used to it to the point where I really don't pay any more attention to. Of course, I pay attention in a sense that I'm holding the steering wheel and I'm looking out the window. I'm not checking my phone or watching movies. None of that stuff. But I'm not paying attention. Like, I trust the car to change lanes. I'm not checking the camera to make sure there's no car coming. I'm incredibly comfortable with pedestrians. Of course, I always, this is the only time when I'm ready to press the brake pad any second when there's a pedestrian around me. But quite frankly, I trust the car much more than I trust myself. My son is now learning to drive. He's 16 years old, and he's a great driver for his age, but he's not even close, the comparison between the safety that FSD provides and a teenager. So we've passed that. We are, definitely above human capability of driving. There is the Moravec problem, which I think has to be solved. So the hard things are easy, easy things are hard. In other words, some of the really hard things have been solved. 6-lane highway, switching lanes, moving over at 60 miles an hour when other cars are coming.
that's relatively safe because you have a bunch of cameras, you have an incredibly fast inference engine, and an algorithm which is really working well. Where it's a little bit more difficult is, I always use the example, let's say picking up a coffee at a Starbucks drive-through. That's still a challenge for FSD. I think it's not trained enough. Maybe it's too detailed. There is one specific problem, which is, I call it sudden close appearance of objects. And I think that has to do with the way depth is being solved. So the depth problem has been solved by not using, radar or lidar or anything like that, but by actually using the cameras and the video feed and extrapolating from time to vision or something like that, the depth, and then when something pops up very close, suddenly there is not enough, there's not enough time lapse to estimate the depth. So I think there's a little bit of a problem there. I think that's probably why radar might come back. We'll see what happens there. So there's still open questions, but I just want to this is, of course, I mean, we've been talking about FSD on this podcast quite a bit, and there's so much been talked about and written about. So this episode is not about that. It's just an example of taking the big risk that a CEO like Elon Musk has done. Just another thing that he's done with FSD is also build internal chips, inference chips in particular. Dojo is questionable, but that's not because Dojo is a bad product or anything like that. It's just because NVIDIA is running away with training. They're just so much better at it. But inference is absolutely powerful and really great that Tesla has put in hardware that probably costs, I would guess at least $1,000, if not more, into cars years before FSD was ready. And, that was depressing margins and all that kind of stuff. But now we're here, now we have this, and, they're making, on me, they're making $1,200 a year more that they would have been making if there wasn't any hardware in the car, and they will keep on making that money as long as I'm a Tesla customer. So the third example I want to mention, where it just shows the ability of Elon Musk to take massive risks and execute against, is the Cybertruck. Now, why do I think the Cybertruck is a great example? It's to take the risk to design something like that, to set the stage for a new kind of aesthetic, to change the way trucking or at least consumer trucking is going to be perceived in the future. All of these things take a CEO of the caliber of Elon Musk that can galvanize engineers, galvanize designers to not just do what they're told, but really also put their heart and soul in it and deliver a great product. Now, just as a caveat here, excuse me, Cybertruck actually is not solved yet from a technical perspective. I think the battery performance, the powertrain performance is not where it should be. I think Tesla is struggling with size, that we see that also with the Semi. But that's a technical problem, an engineering problem. We believe this will be solved at some point, the same way FSD was delayed for maybe 2 or 3 years, but it's here and it's phenomenal. So we believe the same thing will happen with Cybertruck. But just this kind of risk taking is very, very unique. And we've said that on this podcast several times before. The really exclusive thing that humans have in general is, one of them is risk taking, the other is creativity. And there's others, but those are definitely the humanity of a human, and that's just sort of to differentiate humans from robots and AI. But what I think is more interesting here in this conversation is not what differentiates humans from robots and AI. What the interesting thing is also what makes actually a phenomenal CEO, right? What is an amazing CEO? And the answer is, it's actually all of the above, right? Risk-taking, creativity, humanity, and that's all that, all of these traits Musk has. So as a conclusion, in this particular part of this episode where we talk about Elon Musk's compensation, we believe he deserves to be compensated, not just because he actually made us the money, not just because he actually delivered against a deal where he was promised to be paid if he delivers, but he should also be paid because he deserves to be paid. he deserves to be paid, and there should be people should get inspiration from this. We need more people like Elon Musk. We need more people. Are we going to take away the pay or the wealth of Jensen Huang now because he's created an amazing amount of wealth with Nvidia? Are we going to do that, or of course not? I mean, that would be absurd. I mean, you know, at some point we are slipping into socialism if we keep doing that. So, which will bring me to the second point. But before I go there, again, to summarize why we're voting yes for Elon's pay packages. First, he was promised that he's going to be paid if he delivers. He did deliver. We made the money, so we're very happy. There is an army of retail shareholders who are supporting Elon Musk, not because they're stupid, not because they're gullible Musk fans. No, it's because they're responsible human beings that put their own capital, their livelihoods at risk, because they believe in a future of progress, of better life for their offsprings, a better solution for planet problems, a better solution for traffic problems, a better solution for humanity. You know, two of the biggest value adds that Tesla is bringing to the world. One is it's freeing us from driving, making driving safer, more fun. And second, it's freeing humans from menial labor. We're not there yet. The humanoid robot will take time, but it's going to succeed. And those are the two main things, which are all driven by AI, which are all driven by the massive, gutsy risk-taking of Elon Musk. And just again, I want to bring this point across. There's sometimes this conversation, oh, well, the retail shareholders are on Musk's side, but the institutionals are not, and the institutionals are the professionals. They know what they're doing. The retailers are just gullible, stupid. You know, it's actually exactly the opposite. The stupid people are the institutional investors because they don't have skin in the game. They don't think. They don't make the effort to go through all the pros and cons. To some extent, they're even biased by political considerations and things like that. But I don't even want to go there, at least not in this part of the episode. I'm going to talk about this a bit later. But I just think that if you're a bureaucrat that runs some random fund at CalPERS or the Norwegian Sovereign Fund or the controller of the state of New York, you're not an investor. You're a bureaucrat. You channel money where you're supposed to channel it. Everything is regulated. They don't have discretionary power, nor do they want to have discretionary power. Those are not risk takers. Those are not thinkers. Those are not intellectually curious people. That's why they are in those jobs. Contrast that to the army of retail shareholders who very often have a few $100,000, maybe a few $1 million in Tesla, and that's typically all they have. Now, let me tell you, even if they don't have a proper education in finance or whatever, they will think through this incredibly deeply. They follow whatever is out there, whether it's YouTube, whether it's Wall Street analysts, whether it's Twitter. They follow, they read, they think, they drive the car. I would think that most of these so-called institutional investors who are voting no here have never even tested FSD and now have an opinion about Tesla, which is absurd. So my point here is that this is a beautiful, beautiful example of an uprising of the little man, in literally, of course, little man and little woman. Actually, most of the people who are very vocal are women, so I don't want to neglect that part of society at all. In fact, I want to point them out as almost, you know, the real soldiers here. You know, we've had Kathy Wood standing out for Musk and Tesla. We've had what's the lady's name, the CEO of SpaceX, standing behind Musk, and now we have a few ladies who are fighting tooth and nail to help people vote and things like that. So again, just this is a tangent, but it's actually interesting how many women are supporting Tesla and Elon Musk, and that's just a side point which I find amusing and just shows that that we are really living in a time when we're not just talking about some sort of equality between the genders, but we're really taking advantage of the genuine you know, interest and ingenuity of humans. So back to the point here. So we have this army of interested, engaged, responsible human beings who not just fight for their own wealth here, they fight for a better future. Now, let me talk about the second point, which is the move from Delaware to Texas that we also support. And that, to me, is actually a much bigger problem for society. It's not such a big problem for us shareholders, but it's a huge problem for society. Now, let me give a little bit of a backstory here. So the Delaware court has been, I think, for decades, the court for corporate America. So all corporates put their legal residence to Delaware because the law there is whatever it is. I don't know the details. But what happened now with this situation with Tesla is that there was a vote years ago to pay Elon Musk a certain amount of shares and money and things like that if the company delivers against certain metrics. The company delivered against all these metrics. The stock has gone up at least 10x since that vote. That's not just since the vote, of course, not since the IPO. Since the IPO, the stock has done much, much better. So because all of these things have been delivered as promised, Elon Musk is going to be paid a certain amount of money, which I think amounts to about $50 billion. That's also dependent on the stock price, of course, but let's say it's something like that. Now, the court in Delaware decided that that is nullified because I think it's a she. The judge said that apparently shareholders didn't know what they're voting for, and it's outrageous, and it's too much, and Musk should not be paid. Now, that's the first slap in the face to Tesla shareholders, to Elon Musk, and to corporate America. The second slap in the face, which is really, what's the word? Insult meets, I don't know, something like that. So it's a triple insult, is that not just we shareholders are being screwed by this judge that our CEO has delivered, who is being paid according to what we promised him. No, we should now pay that law firm that started this whole charade. We should pay them, I think, $6 billion. So that is the outrageousness of outrageousness. Now, the reason we're for the move to Texas is simply because this is a complete overreach of powers. This is, I think, in my opinion, not just a bad decision by the judge. This is overreach. And this opens the floodgates for future activist decisions by the courts, which unfortunately has been going on, particularly under the Biden administration. I believe this is a trend that has been going on even before, and that's been accelerated by COVID, because what COVID did to this country, it undermined its institutions in many ways. It undermined the institution of liberty. It undermined the institution of medicine. Who trusts medicine at this point? I don't trust anybody anymore in medicine, because what they did to us in terms of lying about COVID, in terms of forcing us to do things, one of the things taking the vaccines and then get paid for giving vaccines and things like that. I mean, it's just outrageous. So we've been overwhelmed with misappropriation of institutions in all kinds of ways. And this is just another example. But this is a small Trojan horse. If we don't stop this, well, where is it going to stop, right? Tomorrow, a judge will maybe decide, a judge in Delaware will decide that Tesla should not be making cars in China, or maybe unionize, or Tesla should open up its charging network to competitors, which they, by the way, did. I'm just saying, well, where do you stop? Like, if you think that you know better than the board and the owners of the company, then who's going to stop you tomorrow from starting to make other decisions? We've seen, again, overreach of institutions, also the other way around. Let's say Disney having a say in gender politics in Florida or things like that. Totally absurd. But I'm just saying, like, this collectivist, left-leaning tendencies of the elites, particularly in the Northeast, coming from the universities, is way overreaching. This is not just an amusing discussion topic for a Bill Maher political show or something like that. This is serious now. And we at Orange Capital Partners, and me personally, I was educated at the University of Chicago. I'm a big believer in the financial markets. In fact, I believe the financial markets are one of the last bastions we have of checks and balances. And now that's being undermined because we have this fundamental problem that we have a judge in Delaware now deciding about corporate strategy, pay, basically telling an army of involved, educated, engaged human beings who have their wealth at stake, telling them that they don't know what they're doing and that they should be listening to her because she knows better. And the other problem that we see, which is a little bit more serious, actually, even than the judge in Delaware, it is this overreaching power of fund managers, particularly passive investment funds and funds like, let's say, the Sovereign Wealth Fund of Norway. What I mean the overreaching power is that these people take it upon themselves to make a vote like this, and whether that vote is considered or not, let's put that aside for a second. It's just that there is a misappropriation of power and voting rights, because in my opinion, the only people who should vote are the owners. And if I buy an ETF, the person that runs that ETF, whoever is deciding what to vote, she is not the owner. The owner is still me. So that has to be clear. And that's not clear right now. So this is a flaw in the way securities voting and securities law works in the US. And even worse, what happened with the Norwegian Sovereign Wealth Fund, that's much, much worse. Because there we have a bureaucrat who runs, by definition, a fund that is owned by the people of Norway, and then makes decisions such as, for example, voting against the pay package of Elon Musk without consulting his constituency. Now, maybe there is a fine print somewhere in the law of Norway which says that the sovereign wealth fund can do whatever they want. But then we have a problem there, which is that there is a country like Norway can buy shares in our companies, and then they can start telling us what to do. They could also maybe start voting for something like, oh, you have to move our factories to Norway, or you shouldn't even make electric cars because we are an oil country. We want oil to the idea of voting in the shareholder context of corporations is that owners have a say, and owners have the best incentive to do the right thing because they have capital at risk. Well, this person, whoever that is at Norway, or even worse, the controller of New York State, or and you can go on, they have no, the CalPERS people, they have no skin in the game. There's no risk there, not even reputational risk. The position they have is so small that even if Tesla stock goes down, they don't care. Actually, sometimes, and this is just a small technicality, this is a tangent again, if you are actually an index fund and you underweight Tesla a little bit, then you profit from Tesla going down because you're an index fund and you're overweighting other stocks, and then if Tesla goes down, you make money, you actually do better. Let me not go further here. This is really technical. I'm just saying that this is a fundamental flaw, and actually the silver lining in this whole Delaware charade is that all of these things are coming to the surface. And I want to end this episode actually with, I want to plea to everybody who's listening, to the world out there, to take this very seriously. You can have your own opinions about this, but please only express them if you also have skin in the game. Otherwise, you have no business being in this. This is our company. This is our wealth. When I mean our, it's like we shareholders, we so-called retail shareholders, the people who have real money at stake. This is our livelihoods. You might have an opinion. You might not like Elon Musk. You might be appalled by his demeanor. You might not like him because you work for a traditional car company and you're scared for your job. You might not like him because you you want more DEI in companies, and Tesla doesn't honor that. So you go work somewhere else, that's fine. But don't mess around with our livelihood. We have a mission at Tesla. It's to accelerate the advent of sustainable energy and autonomy. This is what we want. If you don't agree with that, you can short our stock, or you can build companies that, or invest in companies that do something that you like, that makes maybe our lives more difficult or whatever, or just not be involved. But to buy our shares and then vote against us, that's that's absurd. And you can do that. In other words, people can do that actually with power if they are passive money managers or just bureaucrats who manage state-owned funds and things like that. And that's a flaw. And hopefully this situation will unravel all these flaws and fix them. Thank you.